Good afternoon. Thank you for attending on another episode of my real estate podcast. Today's title is Who Said Right Now is the Worst Time to Invest in Rental Properties? Once again, hello, my name is SeeWing Yee from the Yee Real Estate Network. And for more than 2 decades, I've been helping real estate investors from wherever they are located in the country or overseas, especially wherever you live in a high cost area, California, New York, wherever, you have the ability to buy out of state, to buy remotely, to buy passively, turnkey, very high cash flow properties, high appreciation potential in the best markets in the country. At this particular moment, they are mainly located in the South and Southeast. All right, so before I will share my screen, if you've been hearing that right now is the worst time to buy, the recession is coming. Some people may even say there's a real estate crash, bubble, or correction, whatever. Okay, I'm going right now. I'm going to dispel all those legendary myths, misleading, inaccurate, doom and gloom, chicken little, the world's coming to an end situation that you've been hearing on the news media around real estate. All the so-called real estate experts, all the YouTubers that going for the clickbait type of crash videos to scare the heck out of people. So anyway, I'm here to share with you information that are verifiable, that are transparent. You can feel free to do your own research. Okay, I'm not here to overhype anything. I'm just giving you a true down to earth realistic situation that what I'm trying to say is any economic cycle, in any real estate cycle, there's always some people that can come out of this in any kind of crisis, right? It's not doom and gloom. There are winners and losers in every economic and business cycles. If you are a true, smart, intelligent, common sense, turnkey real estate investor, if you are mom and pop, most of you out there, right? You can do something what I'm about to show you. Okay, this is I'm not. I am giving you a situation here that is I'm making a hypothetical illustration, but you have to do your own research and due diligence to determine what's best for you. So what I'm about to show you is a real situation, except that the information are obviously is not a guarantee, but information are just fairly accurate. At the same time, you can do your own. You can trust but verify. Okay, everything is verifiable. What I'm about to show you. Okay, so let's just go ahead and dive in on this amazing opportunities. All right, so let me share my screen, and the first thing I'm going to go over is number one. There's no such thing as a uh, real estate market. There's no such thing as a national real estate market, right? So if you know where to buy, how to buy, what resources you're using, you have to identify the specific submarket, the specific niche, the specific neighborhood, and find a great team, a great real estate turnkey provider to help you to maneuver through all the obstacles. So with that said, this is one of the presentation that I have that, you know, among several, okay, we have this kind of properties available. By the way, this builder in Palm Bay, Florida, which is one of the fastest growing markets in the country. A lot of people may not even heard of it. Is Palm Bay, 1 hour east of Orlando, and along the Atlantic coast, very close to Melbourne, next door to Melbourne. It's very close to Cape Canaveral, the Kennedy Space Center, and all the it's also called the Space Coast, right? So very fast growing market. Again, do your own Google research, but I'm just gonna dive on in on this particular property. Because we are a turnkey provider, because my company is a real estate investment club, we have several thousand members that I have guided to purchase cash flow investment properties off market, not available to the general public, because we have a relationship with many builders and local builders throughout the U.S. over many, many years. So builders love working with us because we have investor ready. We have uh, the economy of scale, the local builder in a specific area. They love to work with us because our investors can pull the trigger. They and they save money by not allocating extra money for marketing to the general public for their new construction homes. So they strictly sell to investors, and because they're saving the cost, that the discount, they're able to build homes for our investor database. By the way, you people out there, you can become a member, a free member of our organization. At the bottom of my video, feel free to like the button if you like, if you see value in our presentation, and also click the subscribe button so you can follow our YouTube channel on a weekly basis. We have many things to share, and best of all is, yeah, you should then log in and sign up to a newsletter on our website database, the YeeRealestateNetwork.com. Put your emails on there. There will be a free membership. You can access to weekly, real-time real estate investment properties out of state, wherever you're located, in an expensive market, overseas, wherever you are. You can buy remotely, passively, turnkey cash flow properties with all the resources or houses already been vetted for you. We have done most of the research and due diligence on your behalf. All you have to do is just easily take action by using our resources, turnkey one-stop shop approach in a specific market. So this market, like I said, is Palm Bay. And our local builder, we have a relationship with over many, many years because our organization has been promoting Central Florida properties, new constructions for many, many years. And now we are in one of our product, so-called, is located here in Palm Bay, very fast growing. So without further ado, they are able to give us a discount, our investors, okay, only, members only. This property, which is sold to our investors currently today in August 2022 for $249,000, right? This is the price. It's a pre-construction. You pay 25% down payment to reserve the lot, right? And the title company will take the deposit and they will allocate to the builder on a specific draws. Little by little money are being used to build the home, right? And it's a construction to permanent loan. That's what you're doing. So you lock in at today's interest rate, do the construction loan. When this house is finished in about 4 to 6 months, your 25% down payment will be reallocated to finish the loan, lock in your current rate, whatever it is, 6%, whatever, and then you close escrow, and then our property management will easily put the tenant in place so you can earn cash flow money and everything in equity appreciation, tax benefits, and mortgage pay down by your tenant, et cetera, et cetera, et cetera. All right, so $249,000 purchase price to reserve the lot. The market price is $302,000, right? You're getting that 20% discount. So you don't have to go to the open market yourself and try to wait for the real estate market to crash before you can get a discounted price somewhere. By the way, the real estate market is not going to crash. All right. Okay. I'm not going to spend any more time. You can watch my other videos and I'll tell you why, basically. All right. So walk-in equity, the appraised value on another builder. I will show you another builder, a similar builder very close by in proximity. They are selling their new homes, similar square footage, almost similar floor plan, very close by. They're selling to the general public at $302,000. Our builder is selling to our investors at $249,000. So you put 25% down payment at a whopping 6% interest rate, right? True approximate interest rate for investor, the interest rate a little bit higher than the owner occupied, obviously. So your down payment is 62,250. All right. So keep that in mind. And then in case you have not heard, right, in case you did not get the memo, because the home affordability is at a 40-year low, we have getting more tenants than ever before in U.S. modern economic history. I'll say it again. There are more tenants are about to rent or already renting than there are homeowners. That's what's going on in this economic world, in real estate world, really. So as a result, skyrocketing rents is occurring all over the place during the pandemic housing boom, right? And some markets, the landlords are increasing the rent 30, 40, 50, 60% rental increase. This is mind-boggling and insane. So it does not pay to be a renter unless you are a landlord. You'd be glad to accept multiple bidding wars by renters to rent your beautiful new construction house once it is done. And I will prove to you why this gross rent of $2,200 is very realistic. By the way, the skyrocketing of rents are slowly catching up to the recent massive skyrocketing in housing prices that has occurred all over the country, in case you have not getting the memo, right? So this gross monthly rent, okay, is quite realistic right now. I'll show you the metric behind it very, very shortly. But anyway, you could have tons of renters knocking down your door, begging to rent in this Palm Bay area, because you have people making 70, 80, 90, $100,000 who cannot or not really or able to buy a house. They'd be glad to pay 30 to 40% of their paycheck to pay you at least $2,200 of rent. As of right now, we believe, based on the data that we have researched, that the skyrocketing of rents is continuing, and the rental rates increase usually lags behind 1 to 2 years behind the skyrocketing of pricing appreciation of houses. Now that appreciation of houses have subsided to a single digit or zero, whatever it is, at least short term, but the skyrocketing of rents is picking up momentum, and the rent will continue to be higher and higher. It's not across the board everywhere in the country. Certain markets and sub-markets, you're getting higher rental rates increase than other markets based on, supply and demand of homes to rent or homes to buy, based on population and job growth. Having said that, Palm Bay is one of the top areas of job growth, population growth, because this is a space coast. We have the military space force, New Branch military, or here in Patrick Air Force Base, close by, a few miles away. Then you have defense contractors, and we have SpaceX and Elon Musk and his space program are conducting research in this area. There are more than 400 high-tech companies and defense industry are located in the Central Florida, Eastern Florida coast, close by Palm Bay, close by Cape Canaveral, Kennedy Space Center, et cetera, and et cetera. Okay, enough of that. So getting back to this cash flow situation, all right? I mean, where else in the country where you can get rent to value ratio at almost 1%, the 1% rule? Please do your research. Try to find a home that you can buy, especially a new construction, high quality new construction, anywhere in the country for that matter, especially in Florida, which is the fastest growing state in the country in population growth and everything else. Everybody is moving to Florida, not just recently, but for the past several decades. Whatever. Okay, so almost 0.9% rent to value ratio, right? And then capitalization rate at 7.8%. Cap rate, this is mind-boggling. I have no time to explain to you in case some of you do not know what I mean by capitalization rate. A 5% capitalization rate is an average benchmark for cash flow properties, but this In this case, 7.8% is mind-boggling. Cash on cash return 9%. Then I project 7% appreciation. So by the way, when you close escrow, assuming you're still able to get the fair market value of 302, when you close that when house is completed, right? You locked in the 249K on a contract price. You already have a walking equity of around $50,000. Your down payment is 62 total out of pocket, including closing costs. Down payment is 66,000. 66,000 when you finish completion of this house, and if the appraised value still the same 302 on other comps, guess what? Divide $50,000 of walking equity into 66,000. So what is your total return on investments on your on total ROI, return on investment? Almost 100%, right? You put in 66,000, you recoup 50 grand even before the renter moves in. Let's say throughout the course of a year, right? Your total debt payment is whatever. Again, I said again, your mortgage is high as 6%. Imagine you buy this property today, for example, at 6% locking in rate. What if the mortgage rate decreased in the next 2-3 years to like 5% or 4.5%? You know what you can do at that time? Yes, you're gonna refinance this loan to a 4 to 4.5% loan. Then after you refinance, what could be the monthly net cash flow instead of $500 a day? Your monthly net cash flow could be let me see, around $700. $700 monthly net cash flow after your deduction of your monthly taxes, insurance, property management fee of 8%, even a vacancy rate of 2%. There's no maintenance because it's a brand new house for that, for God's sake. All right. Right now you're getting almost $500 monthly net cash flow. We're talking 7.8 cap rate, right? And this is mind-boggling. Let's look at the end of the first year return. If your monthly net cash flow at 25% down payment and 6% mortgage rate, each month is almost 500. Multiplied by 12 months, at the end of the first year of ownership, your annual net cash flow is almost $6,000. Wait, there's more. It sounds like an infomercial. You're gonna get principal reduction benefit to the tune of $2,200 because your tenant is paying down your mortgage, plus at 7% appreciation. 7% multiplied by 249,000. Your at the end of the first year annual appreciation is right here, almost 25,000. So $25,000 at the end of first year of holding this property, plus the net annual cash flow of almost 6,000, equal gross equity income is 33,000. So 33,000 divided into your down payment of 66,000. Your total investment at the end of the first year is 50%. That 50% first year total return, plus the 100%, almost 100% of the return that you have gotten by getting a $50,000 walking equity compared to your down payment. So you're getting what you're getting. You're getting 150% return at the end of the first year, combining these two factors. Does that make sense? But wait, there's more. I don't even have time to go over the return from year 2 to year 10, because from year 2 to year 10, your tenant will continue to pay down your 30-year fixed rate mortgage, right? Therefore, your debt can get decreased, every annually perhaps. Then you get 3 to 6% of annual appreciation. Your equity is going to grow, right? Then you're going to increase your rent to coincide with inflation, right? Rental increase coincide with annual inflation. So you're going to continue raise your rent. So your cash flow is going to get higher. Your debt obligation is going to be lower because your tenant is making you filthy wealthy, right? Your tenant paycheck, the rent gonna pay down your mortgage, gonna continue to pay your taxes, insurance, property management fee, any maintenance, any upkeep, any vacancy. Your tenants rent gonna pay all that for you. So the rate of return from second to 10th year will be double and triple digit in terms of ROI, internal rate of return. I'm not gonna go there, right? All the metrics will benefit you. Okay, so I'm on the roll. Can't you see? Can't you see? Can you tell I'm on the roll? You could be on the roll too if you own one of these assets. All right, so anything now, let me show you something else. Okay, still skeptical. All right, this property is a real address, right? I took the liberty putting the address of this new construction, the lot. What I found, yeah, this address is available. This type of lot is available in this vicinity. We have 10 lots, I believe, as of a couple of weeks ago. They may be gone, but once those 10 lots are purchased by investors, the builder going to release more lots because they have permitted. I don't know how many more, not that many, right? We always have more lots, more investors demand than the available lots. So this kind of lots will go very, very quickly. All right. So I took the liberty of using the rent-o-meter. This very, very popular, very realistic rental comp in any community in the US. I pay for this subscription, by the way. So put down the address of this lot. All right. And then I put down the 3-bedroom. I took, see, 3-bedroom, the address, and a 3-mile radius. And I click analyze. Then what we see 88 properties within this square footage, within these 3-bedrooms, within 3-mile radius in Palm Bay. And out of the 88 homes, we are seeing what are the rental comps. Those are, this is real-time information, right? Rentometer.com. You can subscribe for it. You pay a monthly fee. I don't know how much, $15. So, as I said, the skyrocketing events is happening all over the country, even more so than hot markets such as Palm Bay. So now, because the rental rate increases always lags behind the skyrocketing of houses. So you will see the momentum of rental increase will kind of starting right now. So therefore, I would suggest that we could look at the comp on the rent, the lease that was signed very, very close, right? Like today, this month, for example, right? August and June, right? This is more realistic because the rent are getting higher. As you can see, let's do another comparison. A rent that occurred like a few months ago or lower than the rent we're collecting right now because of the continuous skyrocketing of rent, right? So let me compare to you. Should I even waste my time? Because back a few months ago, April, the rent on this similar square footage home out there, by the way, these houses are resale homes, right? They're not new construction. New construction homes usually command a higher rent. So this comp right here, the rental comps right here in the local areas, a lot of these homes are not new construction. They're resale homes, 10, 20 years old, whatever. But all we can do is compare apple to apple as much as we can on these comps. So 1350 square foot, similar square foot, that's the new build that we have. Back in April is rent for $20.75, right? But let's look at the most current. Let's look at August 2022, right? More realistic. Right here, August 2022, 3-bedroom, this address, we don't know. I could easily pick, try to go zoom Zillow this address to see how old is the address, whatever, if I have no time. But so this is most realistic. Right now it's $21.80, almost $2,200 monthly rent to rent a similar square footage, which is only half a mile away. $2,200, right? So that's a real $2,200 is today's rental rate based on apple-to-apple comparison. When these homes are finished construction in the next 4 to 6 months or 8 months, or the next batch of lots that we're gonna release, the builder gonna release for our investors, and you result a lot 3 or 4 months later, and the construction will be finished toward the end of this year, at the beginning of the next year on phase 2. Right now it's phase 1. The phase 1, the lot I think is probably gone now, right? Too many investors' demands, but who's to say? Based on the the data of skyrocketing of rents by the time your homes are completed at the end of this year or the beginning of next year, 2023, maybe the first quarter on your phase two. Who knows, right? The rent may have increased from $2,200 to $2,300, even $2,400, right? Imagine you buy a home today from us, a walk-in equity at 249, 249, right? When houses are locking that price, there's no escalation clause. The builder not going to raise your price because they are spending more of their materials to construct. That's not going to happen, right? These builders are very, very ethical. We know them very well, our turnkey providers in Central Florida. Know these builders very well. They always build for us in the local Central Florida markets. So imagine you close escrow the first quarter on phase two of next year, whatever. Your rent could be $2,300, even $2,400. You put 25% down payment. I mean, that is mind-boggling. Now, what you're thinking, oh, why are you having walking equity 50,000? Why you buy a house today 249 and the comp is around 300? Well, I took the liberty of getting to Zillow and find another builder, new construction, similar square footage in a local area to close where these lots are located. Our construction are located. Similar square footage, 3-bedroom, 2-bath. They are right now selling for 305. That's why you have a walking equity of 50 grand. This is real stuff. This is real stuff. All right, look at this. This is the kind of house that you're buying from us. High quality construction, no different than our competing builder who's selling their houses for 300,000. So our investors getting a discount because for the reasons I just stated. All right, very nicely built. There are bidding war. I mean, people with money or need to rent in this sub-market. Anyway, anything I need to discuss? I think that's it, okay? I think this video is much longer than I anticipated, but everything I've discussed is pure content, pure value add. So this is just one example that you need to just bypass all the negative headlines out there, recession, inflation, crash, all the negative news media, so-called real estate experts talking idiotic stuff. They have no clue what's going on because as real estate investors, you have to find the right people to work with. Real estate market is local. I repeat, there's no such thing as a national real estate market. Every market is different. Some market is going up, some market is going down, some market going through a 5% price correction or whatever. But when you target a specific sub-market, such as Palm Bay and a few other areas that we are also working with in other part of the US, right? You become our member, then free membership, by the way. Okay, you have access to this type of outstanding investment opportunities. Whew, I think that's it. Okay, that's all I need to say. So please click the like button if you see value on my presentation today. If you are a serious investor, if you have the capacity to have the down payment, you have good credit, if you're very motivated, if you're located in a high cost market in California, New York State, or Chicago, or Boston somewhere, if you want to if you want to make some good money, create wealth, right? Becoming a turnkey real estate investor using our methodology is, in my opinion, is the way to go. All right, thank you so much for listening. Subscribe to our channel and click the like button so I can improve my YouTube channel. And also, most important of all, if you want, no obligation, just put down your email on my website and you will become a free member of our investment community. So you have access to off-market opportunities no one else in the country has. All right, that's all I have to say. Sorry for taking so long. So if you listen to this presentation all throughout the whole time, I congratulate you. Thank you so much. And that's the SeeWing Yee from the Yee Real Estate Network. Have a blessed day. Bye-bye.